Hey everyone, Chris Johnson with Money Morning. Rigetti Computing, which is one of my speculative 7 stocks, is trading up 4.5% after missing its earnings report last night. That's right. Bad news is good for the stock. I'm going to show you why, the price chart analysis, the open interest configuration charts that you guys love so much, a little background on why Rigetti is so important over the next 5 to 10 years and why you need to be looking at the stock, and a lot of you have been asking about how I trade leaps on companies like this. It's a great strategy that limits my losses and gives me leverage potential on big movers like Rigetti. I'm not trying to sell you anything today at all, just teach you something new so you'll be a better investor. Let's jump into it right now. All right, let's jump into this very quickly because I've got a lot for you. 13 slides today. It's going to be about a 15-minute run here, but at the end, I'm going to walk through the examples of why I use leaps on companies like Rigetti Computing that give me huge upside. I'm not selling any leap services or anything like that, just giving you an education because a lot of you have been asking about this. So, the other things we're going to cover very quickly is just an intro to quantum computing. We're going to talk about Rigetti's earnings per share. We're going to look at those open interest configuration charts that you guys keep asking for, as well as the chart of Rigetti and how it's nailing the support and resistance levels for the stock, where it's heading in September and October. And then we'll go through those leap examples. So let's jump into the basics of what is quantum computing? And I can remember back when I was in high school, maybe even younger than that, I used to help my dad by programming the computers back with those punch cards. Remember those? Some of you will. They had little holes in them, right? Those are bits, a 1 or a 0, on or off. And that's how computers do their calculations right now. They become much faster. We've got hard drives to hold in that data, but back in the day, I understood how simple computing was because it was just using a 1 or a 0 to do a calculation or go through a series of calculation. Quantum computers are completely different now. They use what are referred to qubits, or that's short for quantum bits. We're talking about 10 to the 29th, 27th power. When you look at what Google or Alphabet came out with last year, they're at about 10 to the 29th power in terms of those bits that they're actually able to do the calculations on. It is night and day, and that's instead of just those 1s and 0s. And the magic starts to happen when they put those 1s and 0s together and allow them to be combined. That's where they get the combination of the 1s and 0s, and allowing it to be a combination of those 1s and 0s basically creates a package that allows the computer to compute much more quickly. They call it a superposition when they do that, right? So the superposition does math calculations, multiple of them at the same time. You get into entanglement where you're putting these qubits together and they can relate to each other, and now you've got something where you're absolutely blowing the compute power away. The problem is, when you look at this is a physics problem, and that's why you hear a lot of studies from MIT and physicists involved with quantum computing. There's a lot of heat, a lot of cooling involved, stability of those qubits, because you're dealing with something that you're trying to kind of twist here, if you will, the physics of the situation. And that is why this has been so hard to kind of achieve. And if you look at what happened over the last year, it's really interesting. Back in January, we saw Jensen Huang come out and say, hey, we're a good 10 to 15 years away from being able to have quantum computers that are going to be applicable to get out there and do things in the industry. And that's when this starts to happen. Mr. Wang came back on his word maybe 3 weeks later, and we saw all these quantum computer companies crash after that, 30, 40, 50, even 60%. A couple weeks later, NVIDIA came out and announced that they were doing their conference, their annual conference, and they were going to have their first ever quantum computing days. That tells you how quickly this is evolving, and it is seriously still in the first or second inning of a 9-inning game, but 10, 15, 20x type of potential here as we see these players evolve. So that is telling you a little bit about how important quantum computing is. Jensen Huang changes his story within a couple of weeks and says, maybe we're 5 years. And you had Google and IBM coming out and saying, yeah, this is going to happen much faster. So Rigetti Computing is one of the leaders. They're one of our speculative 7 companies as well. If you haven't heard about the speculative 7, make certain that you check it out. It is a report I put together together 3, 4, 5 months ago. And these are the companies in my eye, they take over the Mag 7. You've got eVTOL companies, you've got quantum computing companies, and you've got nuclear AI companies like Nanonuclear, SMR, which is NuScale. I just talked with a guest last week about that, and it was a great conversation. Get that report. It explains those 7 companies and the opportunities for each one of them. But enough of the little plug there. Rigetti Computing is in the speculative 7. It's a full stack quantum computing company founded in 2013. They're out in Berkeley, California. You're actually starting to see a lot on CNBC about companies like Rigetti and how they're now building these massive pieces of land because, again, they need a lot of space. They need a lot of cooling, all of those things to get into quantum computing. They are a little bit different. Notice I said full stack here. It's a full stack company. And what that means is they design and manufacture the supercomputers themselves, the circuits, the chips, et cetera, that do the quantum computing. And they've got the software. They've also got cloud applications. And they have products that are for sale right now. $900,000 will get you one of Rigetti Computing's systems, if you like. Think about this. There's actually one that is being installed in South Korea right now. It's not generating a lot of revenue. Remember, this is pre-earnings. This is where the company is growing and investing in themselves. And there's some speculation and obviously risk that comes with that. But the company is coming up the curve very quickly. Think of them as kind of like a Microsoft when we say full stack. They develop those computers and not necessarily the chips in Microsoft's case, but then they've also got the applications and then they've got the cloud applications as well. So they can take it to businesses in different ways. That's the same thing that Rigetti is trying to put together here. And the applications for this are everything from medical science and medical studies to logistics, anything where you're doing a lot of compute power. Some people saying that this could actually be the beginning of the end of blockchain. There's so much computing power here. Put a comment down below on your thoughts about that. Could you have a supercomputer, a quantum computer that's going to be able to break all of that blockchain math? I don't want to get too conspiracy theory here on you. I don't have an opinion. Here's the quarterly earnings that came out last night. Notice that they missed on their normalized and their GAAP earnings down below 6 cents they missed by. This is one of a trend. You usually see them around 2 to 3 cents on that normalized earnings per share. So is what they've missed here over the last year. The trend on revenues head in the right direction, $1.8 million. They missed their goal by 72,000. It's $1.8 million, folks. It's not billion, it's millions here. So you are dealing with a company this small. Investors are looking past that, though, the fact that they missed both on the earnings and the revenue, because this is early stage development. The stock's trading up 4% today. Here's the most basic of the charts that you need to watch. The 50-day moving average on Rigetti turning bullish there in early May. Sidebar for just a second so I can give you a lesson on that 50-day. I studied the S&P 500, all 500 stocks, 20 years worth of data, just quantifying whether each individual stock was trading with a 50-day moving average that was trending higher. When it is, you've got a 2 out of 3 chance a stock is going to close higher the next day. It is literally that simple, and it embodies the saying, the trend is your friend. Write that down and put it on your screen. The reverse is true as well. When the 50-day moving average is trending lower, 2 to 3 chance that the stock is going to close lower. Let's get back to the quantum computing here, though. Rigetti's got that 50-day that turned bullish, and we've seen it support the stock right here in the middle of June. Your 50-day normally is going to be very bullish when it is supportive of the stock. Last earnings, we saw a nice rally that took the stock up 50% from $10 up to $15. We're not getting the same out of the gate right now. I'm going to skip by this next chart very quickly and get to the open interest configuration. We'll come back to the other chart in a second, but this is why you're seeing that resistance. Notice 2 things, and everybody loves these charts. $14.50 is where all that put open interest. Open interest are open option contracts. So put contracts right now that are open at the 14.5 strike on Rigetti. And when you look at the one that stands out like another sore thumb in the green, it is the $18 strike. That's where you've got all of the calls. Look at the 17.5. Not really anything, but that 18 has got a ton, almost 100,000 contracts that are open at that level. Let's let's look at the chart of the stock very quickly and see how it's played with those levels. There we go. So up around that 17.5 to 18, we've seen resistance here now, twice approaching this. These options expire in 2 days on Friday. Look at that 14.5 level, though, folks. You had one close before after we gapped up. This is when they last shared an update on their quantum computing and where they were in terms of their annual goal, and we got that spike higher, as well as some partnerships that they are out there announcing too. But notice that 14.50 is held, that $18 is held, and it comes down to that open interest that you can see right there. Those go away on this Friday. Here's what's going on today with these contracts. You actually see the 18 strike, and this is volume, not open interest, but lots of trading activity on those 17, 16, and 18 calls. Well, I'll tell you what's going on. I looked at the options prices on these right now, and I looked at some of the trade blotter on this. These are people that are selling covered calls right ahead of Friday's expiration. In my opinion, on a stock like this, it's the best time to do it. You take advantage of the volatility, and you know what? As long as you're okay with the tax consequences of getting the stock called away from you, you can go back and buy it. Your wash rules and all that. Talk to your tax accountant before you do this. But if you're going to get it called away, you're going to put a little extra money in your pocket here over the next couple days. Bottom line is that we should see that 18 strike kind of hold as resistance until they go away. And again, that's going to be this Friday. And then this happens. We're already trading above, and this is the September 19th expiration. Always look at the monthlies. Don't look at the dailies, the weeklies, the quarterlies. Look at the monthly expirations when you're using open interest configuration. That's where the trading volume and the open interest is. If you look at any of those other series, you're going to look at something that's much smaller and less robust. So we're already trading above 16 and 17. This is significant because these options, being September expiration, are likely already hedged. That's why open interest acts as support and resistance, because the people that sold those options have to go and start hedging themselves when you see a break above. Guess what? The people who sold those 16 calls to somebody that expire in September, they've already hedged this thing. They don't think it's going to be coming back down. And when you look at the upside potential, 20 is the first strike that starts to stick out. Next week, we'll see more activity. Maybe an update from me on that. And then your 25 strike. That's where you're targeting the stock to go over the next month. I expect to see the support hold in. $13 is right where you see the support. I don't think we see $13 unless something huge happens in the market. But right now, you'll expect to see, with these levels already behind us, 18, when we break above it, will turn into some support. You'll start to see more puts trade on this, as we did with Archer Aviation at that, my goodness, $9.50 level, which held strongly. Check out that Archer video that I did just last week. And then $20 will be your first target, with 25 following after that. And that is on the September expiration series. We're getting to the leaps in just a moment. This is how the chart comes into play with that outlook of a 20, let's call it 22 up to 25. You have a possible volatility surge coming on Rigetti Computing. Right now, you've got momentum. That RSI is not overbought. And then this is something that a lot of people don't look at. These pink lines are Bollinger Bands. They're a great gauge of volatility or upcoming volatility. When the bands get smaller, it normally means that the stock is about to get more volatile. Well, this consolidation that we've seen here on Rigetti Computing over the last month or so has caused those bands to start to tighten up. That's why this has come down. Notice in July, we saw the same thing. The stock was trading at 11, went up to a $17 print. In May, we saw the same thing. Volatility in those bands closed, right? And look at what we got. We got a stock that ran from 10 to 15. Volatility can be directional. You just need to look at the indicators that give you the direction that is likely to happen. And that comes from that 50 and that 200-day moving average. This is a stock that is looking like it's ready to break out. And if you want more information on volatility and Bollinger Bands, look it up. A Bollinger Band basically is just applying the rules of math to a stock price. Stock prices are naturally distributed over time. That's what it is measuring. And when stock prices start to get distributed too tightly, then they compared to historic levels, that's when you see a breakout, because those numbers have to go back to their resting place. So that's what we're about to see with Rigetti pushing up towards that $17, and that is a nice move after an earnings disappointment. Come on. Let's talk about something, though. Leaps. Let me give you my outlook right now, and I've got a screen that'll show you this in a second. I'm looking for Rigetti Computing to head up to a $30, maybe even a $40 print over the next 12 months or so. This is a company that is obviously on that edge of innovation, and it is making the moves, right? Very volatile. As an investor, volatility can be your friend. As a trader, volatility is truly a friend. If you're a long-term investor, volatility is noise. So you find something that gets by it. You either buy the stock and hold it, or you take advantage of something called a leap. These are nothing more than long-term options. Right now, you can buy leaps for January 2026. You can go out to March 2026. I'm eyeing the January 2027. What do they do? Well, make sure you get a basic understanding of options before you try to trade them. Risks associated, etc. I'm going to give you a snapshot of what you can expect, though, here. So, what do leaps do? Well, they offer you leverage with limited risk. It sounds too good to be true. Sometimes those things are. And let me stress again, I don't have a leap service for you to buy. I am just giving you an education on the way that I position myself with these. So, leverage with limited risk. You control 100 shares for less capital. Your maximum loss is the premium that you pay for the leap. That is. More time for your trade. Longer expiration means I can turn the trend into my friend. The volatility in between is noise. Will it affect the value? Absolutely it will, but I keep my eye on the horizon. Lower break-even prices, it is synthetic stock exposure. When I'm buying a call leap, I'm giving up the dividend on a stock. That is the biggest thing. I'm paying a premium for that time, but I'm giving up the dividend. Guess what? Rigetti doesn't pay a dividend. If we're talking IBM or somebody like that that's paying a nice dividend, maybe I buy the stock at that point instead. But I'm also talking about a lot more money for 100 shares of it. Long-term hedge, you can use leaps for that as well. I don't. I use them for, again, leveraging the stock to the upside. And then potential tax edge. Ignore this for our conversation because you should be talking to your tax professional. Let's take a look at the example of how I stress how I have traded Rigetti Computing to the upside. I already own some Rigetti 2027 leaps. Those expire on January 15th, 2027. It feels a long time away, but it's not going to be that long. So I don't own the 15s. I'm actually in a strike that is much lower than this because I bought them a while ago. This is looking at the $15 strike. What that does very quickly is it gives you the opportunity, or it gives you the option to buy 100 shares of Rigetti for $15 a share at some point in the future between now and January 15, 2027, regardless of what the price is. If Rigetti is trading for $15,000 a share because they somehow have discovered the cure for cancer with their supercomputers, their quantum computers, guess what? You get to buy it for $15 a share, right? You're locking in the price that you're going to be able to purchase it for as long as it's before that expiration price. The other side of that is the person that sold you the option has to sell it to you for that. Ouch. That's why we get hedging around those, and that's why open interest configurations work. So when we look at this, here's your hypothetical returns. That option today costs $740. I just checked the price before. So option theoretical value at $30. And this would be on August 15th, a year from today. I use that to calculate the values with my Black-Scholes calculator for all of you that'll ask. It's going to be worth $1,500 if the stock is trading at $30 on August 15th. If it happens sooner than that, the option's going to be worth more because the time premium is going to have more time premium in it. So I've made 113% on that leap. Look at these numbers, pause it, and try to do the calculations if I'm going too quickly. For the same 100 shares, it's going to cost me $1,661, and they're going to be worth around $3,000 because remember, 100 shares, $30, $3,000. I make 80% if I buy 100 shares. That's awesome. That's a great return, right? So Theoretical value, if it goes to 40, is $2,500.42. And then that's up 243. The stock, I'm up to $4,000, and that is 146%. Notice that your leverage here is much more with those options. I always like to point out the downside here. The most I can lose is that $740. Let's say it goes down to $10 on August 15th, 2026. My option is still worth $9. I've lost $835, and I'm down 87%. On the stock side, I've lost $1,000, right? And the capital loss on that stock holding is $2,600 and change. My return or my loss is 40%, so about half. I'm in better shape. There's your benefits of holding. I protect my losses, and notice that $835 is what I lost here. Well, that's because I only have that, the $95 is what it's worth, and I've got that $740. When I go to the stock, it is 1 for 1. Hey, CJ, but you've only got $740 into it. What if the stock really rips, and notice that these start to catch up? Well, that's where I, as an options trader or an option investor in this case, maybe I buy 2 contracts. $1,600 is what it originally cost, right, for those 100 shares. If I buy 2 contracts, I'm pretty close. So I'm now not trying to put down less money on it. I'm trying to get it close to what I would for buying 100 shares, but I'm controlling 200 shares in this case. Now, the returns are going to be exactly the same, but notice at this point, my $1,400, which is less, is about 20% more than the value of that underlying stock. I returned 243% against 140, yada, yada, yada. You get where I'm going with this. You can buy 1, 2, 3 options to start to match, and then you're playing a leverage game. Now, let me say one more time into the screen directly for all of you watching. Make certain that you get the education necessary to understand what you're doing in options trading. If you're buying calls, it's a little bit of an easier game in terms of, how it plays out. The view, let's call it. If you're trading puts, a little bit of the same. I always look at this as something I could go out and use a margin account and actually try to leverage this by buying the stock on margin. I've received a margin call at 5 o'clock in the afternoon. It's no fun, and that was the last time that I traded margin 20-some years ago. Options are the way that I go to limit that loss to the downside and leverage it to the upside. So what is the long-term outlook right now on Rigetti? Let's take a look at my bullet points on it. I always love to give them to you. Short term, let's watch for that break above $18 to result in a fast and aggressive rally towards that $22, maybe even $25 level, but definitely above $20. Indications are we're going to see a volatility surge. That Bollinger Band, remember, expanding. It's because the price is moving higher and faster. 50-day moving averages are in a bullish trend, and that helps to support this rally even further into August. Take your opportunities to buy the dip on these stocks, the IONQs, the D-Waves, and the Rigettis of the world. Make sure you check out that Speculative 7 report. But September trade's going to see some volatility, and that may give you that buy the dip opportunity. Seasonal strength, October through February, is likely to pull up all the boats. These boats are going to go a little bit faster because they are among those speculative companies that investors are right now still in discovery mode on. So they'll take those opportunities to avoid a FOMO trade. Long term, I got a price target of $30 to $40. That's a little wide. Understand that there is so much volatility with this company. $30, I think, is a minimum that you see over a 12 to 18 month period. Remember, my January 2027 leap strategy right now is looking for that $40 stretch to make about 250% on the leaps and still make good money on the actual holding of the stock, obviously. Keep an eye on Google and IBM. If you don't want to go into more speculative companies, these are the companies that are sticking out, and NVIDIA's there too, as the large cap diversified approach. Google, or their Alphabet organization, with their Willow chip last year, making great strides in quantum computing. IBM is going to be there as well. And NVIDIA has made it clear they don't want to get left behind on the quantum computing revolution that is coming. It is coming, folks. Other companies you'll find in the Speculative 7 report, IONQ, D-Wave, NVIDIA's not in there because it's Mag 7 and I think it gets replaced. Nonetheless, you get the idea. There you go. A great overview of what happened with Rigetti Computing, where it's going, and a little bit of an insight into how I use options to leverage these trades. Hope it was helpful for you. Make sure you leave a comment down below, like and subscribe the video. Give me some more stocks that you want to hear about as well, and check me out at moneymorning.com. Writing about this all the time. We'll put an email in your inbox every 2 or 3 days, and you're going to find something on those nuclear AI companies, the quantum computing companies, anything that is right now moving and making money for investors. With that, I'm going to wish you the best trading success. Hope you have a great day. Bye-bye, folks.